Just a week ago, Bitcoin registered its highest weekly close ever at 110,000. But the market sentiment doesn't really feel all that euphoric. I think part of it is Bitcoin has failed to materially break out since about 6 months ago.
Bitcoin finished the month of May at its highest monthly close, around $104,000. But despite this, market euphoria has been subdued. Are markets just maturing? Are they reacting to trade wars? Or is it something else altogether? Joining us now for his thoughts is Gemini head of markets, Patrick Liou. Patrick, welcome to Markets Daily.
Thanks for having me, Jen.
Of course. Now, let's just talk about what's happening in the markets this morning. Just recently we were riding new all-time highs, but now sentiment is not feeling like it once did. What are you watching? How are you making sense of what's going on in the markets?
It's interesting. You mentioned the thing about sentiment, right? Like Bitcoin just recorded its highest monthly close ever last night or 2 nights ago, about 104,000. And just a week ago, Bitcoin registered its highest weekly close ever at 110,000. But the market sentiment doesn't really feel all that euphoric. I think part of it is Bitcoin has failed to materially break out since about 6 months ago. Call it 3 or 4 weeks after the election. So I think given the range bound trading action, we dipped below 80,000 with Liberation Day happening April 8th. There hasn't been quite that euphoria that we've seen in the markets, and people aren't rejoicing over price per se. But overall, like if you kind of zoom out, right, like Bitcoin price has appreciated over time. We kind of registered a couple key milestones, even in the past week or so. This morning, kind of waking up with the headlines over the weekend, some renewed tensions over tariffs. We obviously had the U.S.-China summit in Geneva 2 weeks ago. Representatives from both sides kind of negotiating there, and things, people who kind of came away feeling pretty good about things. And you saw broad relief rally and risk, kind of the most extreme scenarios of the trade war escalating, getting priced out. As with any negotiation, I think you're kind of seeing a little bit of seesaw back and forth. Once again, there's some accusations being thrown around of, China kind of not violating the recent trade truce that was struck with Washington. China has denied that. And so, there's, I guess, a little bit heightened rhetoric once again of just both sides trying to make sure we're back on the right track.
Wish you could access cash without selling your Bitcoin? Ledn makes that possible. The global leader in Bitcoin-backed lending, Ledn has issued over $9 billion in loans since 2018 and never lost a single satoshi of client assets. Why is a Ledn loan different? With custodied loans, collateral is not lent out to generate interest, no credit checks, funds in less than 12 hours, no monthly payments, repay whenever you want with zero penalties. And proof of reserves reports verified by a top accounting firm are published every 6 months. Ledn gives Bitcoin holders a secure, transparent way to unlock liquidity without selling. Learn more at ledn.io. That's ledn.io. Yeah, there has really been some slinging back and forth there. China obviously saying the U.S. broke trade negotiations. US saying the same about China. Talk to me about how you're making sense of the market reaction there. We saw some shaky markets on the back of this news, not as shaky as the beginning of these tariff wars. And I'm curious how you're watching what folks are coining this taco trade. Trump always chickens out. How are you making sense of the ongoing tariff back and forth? What that means for the economy on a global scale, and then how are you translating that back to how you're watching markets and how you're engaging with markets?
Yeah, absolutely. Whether it's taco or call it something else, I think the key things to keep it simple is there a re-escalation of the numbers being thrown around when it comes to tariffs? Like we've kind of already set what people perceive to be the bounds to be pretty extreme, right? Like 145%. on China. So seeing those numbers and where they are within the range, I think will dictate how the market reacts. If we get a number more extreme, 200%, 250%, then it's probably going to be pretty bad
Mhm.
for markets. Right now, I think it's, kind of adjusting within the range a little bit. That's why you're seeing the market not react as poorly and with a lot of kind of back and forth headlines. And then the other thing is really like from like a macroeconomic level, how does these tariffs feed into inflation numbers? So yesterday, we had one of the Fed officials talk about, 10% tariffs isn't necessarily going to get inflation up to that 3% number, which of course, always kind of the lead into that, or the follow through action on that is potential rate hikes, which could really roil global markets.
Well, tell me a little bit more about that. I mean, when we're looking at potential rate hikes or potential rate cuts, what are you expecting for the rest of the year?
So if things kind of stay relatively calm and contained, I think the rates now is probably higher than it needs to be, right? So as long as we have stable growth and we don't see upshoots in inflation numbers, there's probably room for rates to come down. Obviously, I think the administration um, has been vocal in their thoughts about rates having to come down. I think the Fed is taking more of a wait and see approach. Um, so yeah, I think it'll be interesting to see lots of, I guess, uncertainty on both sides. But if I were to lean one way or the other, I think rates come down, we get a little bit of more easing conditions for macro policy.
You mentioned just a few minutes ago that Bitcoin hasn't broken out for the better part of half a year. What do you think it's going to take for that next Bitcoin breakout? And is the lack of a breakout maybe a signal of an asset that is just becoming a little bit more mature than we're used to?
On the fundamental side, what it takes for a breakout, which I think is what we've already seen, is kind of fundamental drivers of inflows into Bitcoin. So one of the things that we've been focused on at Gemini as like a vertical that we want to partner with folks on is the corporate treasury uh, segment, right? Like what started out as Michael Saylor and MicroStrategy just kind of going with this maybe idea or business strategy that's a little bit out there and allocating their treasury and profits into Bitcoin has really caught on, and we've really felt that across client segments from real estate companies, consumer tech companies, hospitality companies, and across the globe. And this is just the corporates, and then you extend that to nation states. Like recently, we saw Arizona and New Hampshire kind of be the first two U.S. states to have a Bitcoin strategic reserve. I think Texas and Ohio could be right behind that. And then on a national level, Senator Lummis kind of reintroducing or bringing up the Bitcoin Act, saying that President Trump is supportive of it. So all these things are kind of ways that we just get people to adopt Bitcoin standard, which ultimately is the most fundamental catalyst to drive price action.
Tell me a little bit more about the conversations you're having around Bitcoin treasuries, because, like you said, when it was just strategy, when it was just Michael Saylor,
Yeah.
folks were looking at Saylor thinking, like, wow, this is kind of an insane strategy. It's obviously become a little bit more mainstream with governments like the United States and Pakistan looking at treasuries for themselves, and companies like you mentioned all over the world looking at their own Bitcoin treasury strategy. What's driving that? Is it a little bit of FOMO on the corporate side, looking at companies like strategy, the amount of Bitcoin it's gained? Is it seeing governments get into it? Like, what is making companies that maybe never looked at crypto before look at something like this?
I think the FOMO part would, I guess, would be like how much like stock prices are trading over their net asset value, and there is a premium there. Don't get me wrong, but I think what's really driving it is just like some of the fundamental uh, ethos and the narrative for Bitcoin, right? Fiat debasement. Bitcoin is a fixed supply. Only 21 million could ever be printed over time, and from that perspective, I think that's really catching on for corporates. Um, we were sitting down at a dinner with Michael Saylor, and one of his like pitches or narratives that he explains is basically you have all these companies that kind of dominate their individual industries and almost have like monopolistic control over them. So like the Amazons, the Googles, the Apples of the world, um, just like dominant market share, right? And if you're kind of anywhere else on that spectrum, you need a Bitcoin strategy to really be successful and sustained over time.
All right, and just before we wrap up, Patrick, I know we've talked about a bunch of different narratives, trends, themes, but if you were to pick one to watch for the second half of the year here, what is that? What are you watching closely?
Yeah, so I think aside from kind of how the corporate treasury strategy develops, additional action from like legislation, whether it's at the national level in DC or at the state levels. So at the national level, we talked about the Bitcoin Act. I think last week, crypto czar David Sachs was on stage with Gemini's founders Cameron and Tyler Winklevoss, reiterating that the Bitcoin Strategic Reserve at the national level permits the buying of Bitcoin as long as the bitcoins are acquired at uh, using a budget neutral manner. So like one way I can think of it, sell gold reserves, buy Bitcoin, right? Like if that happens, we're off to the races. At the state level, it's really kind of continuing to see different states adopt the Bitcoin Strategic Reserve and getting legislators across the aisle at the state senate levels on both sides to buy into this.
All things that we are watching closely here at CoinDesk. Thanks so much for joining Markets Daily today and providing that insight. I'm sure we'll chat again soon.